Hi, welcome back. Today I'm going to go over the real estate market prediction for the next 10 years, 2025 to 2035, per this particular news source. All right, so with that in mind, let me share my screen. Let's get it going. US housing market outlook from Moody's Analytics, and the author of this particular source is Mark Zandi. Again, Moody Analytics is one of those more credible and resource real estate market predictor over the years. Right? Let's see whether, he has a crystal ball. No one have a crystal ball, neither do I. But let's project into the 10 years into the future. Let's see how we could learn from this. All right? So let's give it a try. All right, let's go over the short-term outlook first. For the rest of this year, only a few months away, and then into 2027. So the next 2 years of a short-term outlook. So here are the high-level scenarios. Oh, by the way, as you know by now, if you've been a real estate investor with my network over the years, you need to know that real estate investing for investors are hyper local. There's no such thing as a national housing market. Every market you invest in, the specific market you invest in is super hyper local down to the neighborhood, down to the each block, right? One block could be different than another block across the street. That's how hyper local real estate investing is. All right. So I just want to throw this out there. So some newbies may not understand what I just said. But anyway, let's go on. National home prices expected to move sideways. Well, look, you have to understand, with this news sources that everybody want to create doom and gloom, sensational news, negative news, bring clicks, bring views, all that stuff. So everybody, want to use this sensation headlines, but let's temper that with real, take it slow, digest the data, go beyond the headlines. Not just this particular article, but any article, any news source you could see from any mainstream media. That's how they spin the narrative, right? Agree with me? All right, so let's go on. So national home prices expect to move sideways. Oh, very scary headlines. Flat nominal growth. Okay. Of course, there are regional variation. Of course, another definition for regional variation, real estate is hyper local. Every market is different. Hello. So, South and Western region have modest declines due to stronger builder activity. Northeast and Midwest, more stable, supported by tight inventory. Okay. Quote, worst pain, end quote, likely within the next 6 to 9 months that we can go through before gradual stabilization. Medium to long-term outlook, 2027 to 2035. We're talking the next 8 years. So here are the high-level highlights and predictions and what do you call it? Crystal ball. No, no one have a crystal ball. Okay, so we cannot predict tomorrow. But my particular crystal ball has been broken long, long time ago. Anyway, let's give it a shot. Okay, let's go through the uh, educational content. So, housing market expected to heal slowly. Yeah, requires time and patience. Good. Nominal price growth for next 10 years is plus 23.5%. So 23.5% divided by 10 years, we're talking 2 to 3% appreciation projection. Not so bad. At least it's not going down for the next 10 years. Not that it ever has in a 10-year housing cycle, never has gone down, bro. So it's a somewhat of a positive spin, don't you think, by Moody's Analytics and Mr. Mark Zandi. All right, so let's continue. Real quote, I mean inflation adjusted, inflation does adjust growth, right? Inflation is typically, 3 to 4%, is roughly 0% growth, meaning no real gains over the next decade. So the key takeaway is muted real returns, nominal appreciation offset by inflation. So 2 to 3% appreciation growth, which is pretty aligned by inflation numbers. So yeah, so real and nominal growth you need to understand, right? So anyway, the worst of the pain in a housing market might be now and in the next 6 to 9 months. After that, things will begin to feel a little better, but not good. The housing market will heal. Oh, so nice to hear. But it's going to take time and a lot of patience, according to Mark Zandi, the chief economist of Moody's Analytics. Okay, all right, all right. The next decade, the toughest challenge for real estate investors, people, watching my channel, people part of my network, been part of my network for the last several decades, okay? So, what are the challenges? Which is the decade ahead for the next 10 years will test every investor. That's right. That's right. Especially challenging for new and small investors like yourself out there, the newbies out there, the people only been investing for the past few years. You guys have a lot of challenges ahead, so it's important to have a good mindset to reset your behavior. So basically, cash flow, financing of investment homes, market selection will separate winners from losers. As you know, I personally picked the right markets for our investors over many, many years. So hundreds of our investors follow my guidance and my mentorship. We invest in a very good growth markets, low affordability, entry-level homes, so you can cash flow at 20 to 25% down payment. So my investment model hasn't changed really over the past several decades. All right, so new reality after the pandemic boom. Okay, the pandemic housing boom drove prices up sharply. Mortgage rates jumped from 2.5% during the pandemic housing boom of 2020 to 2022, 2.5 years, or to 8% toward the latter part of 2022, and until now, 2025, now back to 6 point whatever 2% currently as of today, as I'm recording this video in October 2025. So mortgage rate has came down fairly drastically in the past 2.5 years. So there might be some momentum building up as we move into 2026, especially when the mortgage rate come down to 6% or lower in next year. Then I see some very robust demand picking up. People can get off the sidelines. It'll be more competition. They're going to drive up housing prices, and there may be some bidding wars somewhere in some specific market in the country. I don't know which one, but I have a hint. I have a feeling that's going to be in the markets that we are already promoting our turnkey properties for our investors. Okay, this is just my biased opinion. So, as a result, cash flow is harder than ever to achieve. That is so true. So true. Very hard to cash flow these days because of skyrocketing home prices in the past few years and elevated mortgage rates. So this is the two challenges that we've been facing the past few years. So my personal benchmark investment model, I say it again, single family home, new construction, okay, 3 bedroom, 2 bath, purchase price, anywhere from low 200 to to mid 250K. It runs for 1850, down payment about 25%, monthly net cash flow around several $100. And of course, right now we still have builders incentive because this is a buyer's market for the next few months. So take advantage of the amazing buyer's incentive below. So take a look at the big picture of the U.S. or of the throughout the country, the Western markets no longer cash flow clearly. That's why I'm not promoting in any of the housing markets west of the Mississippi, for that matter. Because why? Because medium home prices in the western region of the U.S., the Sun Belt, whatever, is around 400 to 500K, and typical rent is give or take 2,000, maybe slightly higher than 2,000. You put 25% down payment to buy these kind of properties, you could have negative whopping $1,000 monthly negative cash flow. Okay? Okay, am I being very clear what I just said? The examples of the areas where the numbers does not make sense, where you cannot cash flow based on the discrepancies of the rents versus the medium home prices of those locations. Typically, are California, Seattle, Pacific Northwest, Boise, Idaho, Phoenix, Las Vegas, Denver, so forth and so on. Okay, so I'm sure you agree. Okay, if any one of you want to contest with me, confront me on this kind of a very, very conceptual, information, please, you're not going to win the argument with me. And the other challenging aspect is the Midwest trap, the Midwest market homes. Here's the problem. Midwest market, you're getting cheap homes, 50 to 100K in C-class, slumlord, rough areas, and very old homes, 50 to 100 years old. What you get is, you may get some high paper cash flow, but you may not get it soon, immediately, but over time, the next few years, okay, all your excitement and energy level, initially buying a good deal in the Midwest, 20% discount, 30% discount, and all that BS. But over time, because it's an older home in a C class or below, rough neighborhood, okay, you can come up with high CapEx, capital expenditure, high maintenance, high vacancy, the whole nine yards. Paper cash flow on paper looks good, but they will disappear in reality. And finally, buy in a Midwest market where you see some weak appreciation equal very limited wealth growth. That is the key driver to become a wealthy as an investor. You need to have an element of appreciation potential. So Midwest market, for the most part, I'm not saying every location is like that. You're not going to achieve that. So with that said, the growth market advantage. Okay, what you look for as a risk investor, mom and pop investors out there, you guys, and small investors out there, the mom and pops, strong fundamentals, that's how it is. Job growth, migration, population growth, the whole nine yards. And my personal favorites are in North Texas, South Texas, Oklahoma, Alabama, and Central Florida. So these hybrid markets, I call it, balance good cash flow with 25% down payment and potential for long-term appreciation in good markets. All right. So, and of course, this is my numerical formulas. I'm not going to go over this. I address this in many other videos I've done. So check on my website, check on my YouTube channel. You will find many videos that specifically talk about the numbers, okay? And from a high level, capitalization rate, rent to value ratio, cash on cash return, price ranges, rent range. So this is the benchmark. So study this. And I produce a lot of pro formas. I use this property tracker software where you have other software you can use. You need to crunch the numbers. And this is what I call a pro forma, right? You got so just study these numbers, study the metrics, and apply to your own situation. Okay, all right. All right. So I'm not going to talk about this because it'll take too long. So right now we have builder seller incentives with our turnkey cash flow new construction markets in the Sunbelt areas that we are promoting off market. But these incentives are temporary. It may goes away, especially mortgage rate will come down to 6% or below, then you're gonna get some market frenzy. You're gonna get some people can get off the sidelines, and we might see another housing boom somewhere, not everywhere. So currently, builder incentives, the last remaining amazing deals that you're gonna get by new constructions, turnkey model that we've been promoting. Builder incentives will fade as mortgage rates drop below 6%. As I said, no more rate buy downs, no more seller credits in the future. So act during this incentive window right now as we finish off the year 2025. So I talk about this many times for years now. The four pillars in real estate wealth. You make money in many different ways. Do not solely focus on cash flow, especially the first year projection cash flow. You have to look at long term. You have to look at the four pillars of real estate wealth. You make money by cash flow, increasing cash flow, long-term appreciation. You use leverage, you get a 20 to 25% down payment with a 30-year fixed rate mortgage, and of course, tax benefits and tenants gonna pay down your mortgage over time. So the road ahead is the math. The math is harder, right, in terms of a cash flow, but the opportunities remain, right? There are so many markets. Look, there are 19,000 cities across the country. There are 3,000 counties. For us as real estate investors, you gotta find the needle in the haystack, if you will, and you can find them, of course, because investor, you're very different than a primary buyer. A primary buyer are restricted by where you live, and especially when you are not mobile. Primary owner-occupied buyers, you can only buy properties in your specific neighborhood, which could be very costly if you live in a high-cost neighborhood. But as a real estate investor, you have the freedom to invest. Narrow down your market, narrow down among the 19,000 cities and 3,000 counties. You have to nail down to your specific location buy box. But of course, as part of my investment network, I've done all the advanced research for our investors. So we have our own narrow buy box in a specific location, which I will share that with you momentarily. All right, so focus on long-term buy and hold. That's right, long-term investing, no get rich quick schemes. Work with the right operators and the right markets, the right team, the trusted team, which we have. We have teams available in different markets, turnkey, one-stop shop. We have done all the research for you. Not all, but mostly all. But you still need to do your own research and due diligence as well. And remember, don't time the market, buy in the right market. That's the critical. So 2025 to 2035, the decade of challenge and opportunity. So be strategic, be disciplined, and invest smart. And let me give you some real quick rundown of the small town market, boom town markets that we are promoting at this particular moment and in the foreseeable future for that matter. And this is the market we love, we currently are in, and for the foreseeable future. So here it is, right? These five markets. And okay, I'm not going to talk about this too much, but your criteria, you need to, not all inclusive list, but if your criteria meet a lot of these outlines that I just mentioned, then you're in good shape. All right, here we go again. You may pause the screen to digest this outline yourself, but this is what we look for when we invest in particular market. So you need to buy in a beginning of the development before home prices skyrocket. And we focus on A-class properties, double-digit population growth, rent growth, low entry-level homes, new construction as low as $155,000. Isn't it amazing? We have these kind of properties in Oklahoma, by the way. 155K new construction, two-bedroom, two-bath. It will cash flow at 20 to 25% down payment, all right? So buy long distance, buy remote, buy turnkey, New construction, cash flow rentals, take advantage of the builders' incentives. Here are the real quick high-level rundowns. The first market, the best market that in my opinion, of course, I may be biased, I may be subjective, but hey, so a shameful plug on my part. So historic North Texas, multiple boom towns, yeah, Sherman, Denison, Bonham, Greenville, Princeton, Texas, just to name a few, where we have these type of amazing investment opportunities as we speak at this moment. So, cash flow, all the numbers looks good. We have duplex also, very reasonable price duplex. Cash flow very good, brand new. And then, of course, the next market we're promoting is emerging affordable Oklahoma submarkets. Like I mentioned, look at this very inexpensive entry-level homes that our investors are buying, and it's cash flow with 20 to 25% down payment, as you can see on this pro forma. And here the Oklahoma cottages that we mentioned is no longer 150K that was last year. Right now it's 156K. So prices are increasing. The duplex is only 320K in Oklahoma. Good cash flow at 20 to 30% down payment, up to $600 monthly net cash flow. And South Texas, brand new fourplex, 549K, cash flow very, very nicely. Good rental market down there. And Huntsville, Alabama, we have the U.S. Space Command, the Space Force, U.S. military, government and high tech and military. The headquarters moving to Huntsville, Alabama. So expect economic and strategic impacts and rising home prices in the Huntsville area because of this unique high-tech governmental space technology growth in that market. And we have teams in place in not just Huntsville, but all over Alabama. Bessemer, which is outside Birmingham, we have cash flow new construction homes at this price range, good numbers, good growth. And then, of course, we have some new constructions in Huntsville, for example, over here, good cash flow, but they are very, very limited. And finally, the Central Florida bounce back boomtown markets. We have a lot of great builders incentive that allow you to buy very good entry-level homes here in Central Florida for this price, 25% down payment, with amazing mortgage rate buy down. So you will cash flow, several $100s in this good markets in Central Florida. All right. So again, you can pretty much invest passively almost. You spend 1 to 2 hours in managing your vast portfolio, potentially, because guess what? You can delegate and you can outsource. You can delegate to professional property management, and you can outsource your tenant to pay down your mortgage for you. Okay. So of course, as you surround yourself with our team in each market, you'll be fine. And if your property appreciate, 7 to 10% in the next 3 to 5 years, you could cash out refinance or do 10 to 31 tax deferred exchange. So with this excitement growing, inspiration kind of strategies, you get in, buy your first rental or more. In the next few years, you can leverage your property multiple times. So we buy this affordable, low cost entry-level homes in the growth markets, in the 5 markets we just mentioned, and invest for long term, scale your portfolio. You put down your own down payment initially to buy your first rental or more. Then afterwards, you don't need to put any more down payment because you can rely on the equity growth of each of these properties in these markets to scale, multiply, and rinse and repeat for the next 10, 5, 10, 15, 20 years. So you have the ability you need to think, you have to build your empire mindset. You need to think like an emperor, right? You need to scale wisely, run the numbers, work your team, put your team to help you scale your portfolio over time. You need to show discipline and vision. You need to execute on those action plans and, invest systematically and profitably. So we have the system to help you. We have a proprietary system. I have built my network for a long time over the years So we have access to off-market inventory that no one else has. We have resources on the ground, investment loan agents, realtors, property management. We have a team of financial professionals that will help you. We work as a team to help you grow your real estate portfolio and grow your generational wealth. And you have three options at the end of the day. Do nothing, stay in financial mediocrity, do something on your own. You know how hard that is, especially if you work full time and you live in a high cost market. Very, very hard to do things on your own. Or, of course, the last option is to work with us. We have vetted all the resources, all the teams, all the markets. We have a one-stop shop from our great team of turnkey providers in those five markets. So all I gotta do is, contact me if you're motivated, if you're committed, if you're qualified. Hey, contact me. We can do a complimentary consultation, and then we go from there. All right, that's all I have to say. So there's a 10-year projection. Nothing fancy, nothing disruption in a national housing market. But in my personal feeling, the most unique aspect of the properties and the market we're presenting, number one, my favorite is North Texas DFW. There are disruptions going on in this particular market, DFW, North Texas. In fact, I expect a mini housing boom going to go on in North Texas. Of course, Oklahoma and Alabama, Florida, it also and Buffalo Niagara Falls also will do well. All right, so that's the big picture for the next 10 years. What do you think? So ordinarily, there's nothing unique about the next 10 years, nationally speaking, at least according to the so-called experts, but I will create my own opinions. I do not necessarily agree with any of those things because real estate is hyper local. All right. That's all I have to say. Thank you so much for watching and listening, and look forward to talking to you next time. Have a nice day. Bye bye.